Hi, Dale.
Yes, hello. Is this Ivan?
That's right.
Oh, Ivan, it's very nice to meet you finally.
Yeah, I was looking forward to it.
So, I believe we're going to be hosting, moderating a panel coming up, I believe, next Friday. Is that correct?
That's correct. If I'm not mistaken, it's going to be December the 18th. So I'm not sure whether that is Friday or Thursday, but yeah, it's going to be a great opportunity to actually get to understand great thinkers in the forex arena and what are their thoughts going into 2016. It's been a roller coaster 2015, and I believe that 2016 it's also going to be very interesting, very interesting. So
Well, if you think this was a roller coaster, you better buckle up. If you think 2015 was a roller coaster, I'm interested, Ivan, in the selection process. There are many contributors to FX Street. What was the criteria for selecting the expert panel?
well, I think the best person to ask about it is Mauricio, because he's actually the one responsible. But I have to say that
Okay.
I completely agree about the selection of those that are going to be speaking. I've always been an admirer of the work from Ashraf Laidi. I always tend to follow his opinions and his insights in the market, both in CNBC and Bloomberg. Then you've got uh, Forex Live,
Adam.
Adam
Yeah.
Button.
Yes.
He has been an incredible contribution to the forex market. He has taken Forex Live from a from a business that was actually growing, but it still didn't have that much momentum, and he's managed to put together a great team of people and I believe that they are actually helping people day in and day out to become better traders. And then you've got Boris. Boris is the partner from Kathy Lynn, and he's a great.
We, we share
Yeah,
the same birthday, so he has to be okay.
there you go. I was expecting that you may share October 19. That happens to be my day, my birthday.
Oh, yes. So Geminis have the flexibility because we're schizophrenic to be
Right.
bullish 1 minute and bearish the next. So,
Right, I'm
yeah.
balanced. So I always try to find that kind of midpoint. I don't like confrontations. I always find, or I want to seek that kind of equilibrium in my life, and I think that's a good input to have when facing the markets, when covering the markets, because you don't actually get to be too biased on one side or the other. So you actually always try to find the neutral point in your views, in your opinions, in your personal trading.
So how about you, Ivan? Your title is Chief Editor uh, on Content for FX Street. What's your
Yeah,
formal title?
my former title, I actually started first working at FX Street about, if I'm not mistaken, it was 5 years and a half or 6 years ago. And
You were in Asia, right? You were kind of the head guy in the Asia section, right?
I used to until June or July when Gus, I believe you actually had a couple of interviews with Gus in the past.
Yeah.
Actually, Gus decided that he wanted to have a few changes in his career, and even though he still keeps working for FX Street, he decided that it was time for him to change duties. And I was actually given this opportunity. I've been before in my prior post. I was actually the head of the Asian session. I'm originally from Spain, from Barcelona, but
Okay.
since I first was hired by FX Street, I've been living in Asia, first in Thailand, where I spent about 2 years, and then
Wow. Did you love
and
it
then
there?
I did. I first lived in Phuket for about 6 months, and eventually felt a little bit out of place. So I decided to move to Bangkok, and I lasted about a year and a half until I met who became my wife. She's from Indonesia. She's from Bali. So in a way, accidentally, I ended up living in Bali, which it may sound like a cliche, but when I first was introduced to forex, it was also kind of an accident. I was working in London in a conference production company. I was actually a sales representative in the London office in the military section. So my work was actually engaged in high profile conversations with military generals, brigadier general, lieutenant general, majors, etc., so that I could convince them to come over to either London, Frankfurt, all across Europe, because we used to organize conferences, so they would be actually our perfect attendees. So we would put together both the speakers and the attendees. But then there was a turn of events, and actually my romance with London, unlike my romance with Forex, didn't last too long, because I come from a Mediterranean background. I always like kind of good weather, and London just didn't provide that to me. So I decided it was time to pack my bags and come to Asia.
Okay. Yeah, San Diego's weather isn't bad. That's one that I grew up in Chicago, and I wanted to escape that type of climate too.
Actually,
so you had a lot happen to you in the last few years. You went to Asia, a single man, and you found love and your soulmate, and you sound very passionate about the business. How about your impressions about what Lar has accomplished in the last 2.5 years?
It's been 2.5 years. Wow.
Yeah.
Let me ask you. Well, before because you see, I've been working in the Asian session, so I didn't really gain that much insights into the average of people that you usually get on board on a daily basis. But from what I've been told, I believe that it has been a major achievement what LAR has meant for many traders, because nowadays we are at a technological era, and other than the fact that traders feel that the business can be very lonely, very solitary, on top of, you want to interact, you actually want to feel as if you are having this kind of consistent learning while trading. And what better place to put together traders from all walks of life, from all types of levels, with someone like yourself who happens to be a veteran of the markets. Like you like to call yourself, I believe, sometimes a dinosaur, right? So you actually putting baby people that are making their first baby steps, and they are being provided an excellent mentorship by yourself. So I believe that it's an incredible opportunity. It's something that is a free resource. So I don't see why people wouldn't join it, wouldn't continuously join this opportunity to be.
I always say that I'll wire refunds the same day if someone isn't happy.
There you go.
So I look forward to being one of the questioners with you this coming next Friday.
Yeah.
And as you look ahead to 2016, I know we have a series of questions that we're considering asking people. What is the one answer that you want to hear, or a question that you really, it's burning in you and you want to know? None of us except for Nostradamus can predict the future, but what's your big question for 2016, Ivan?
There's many, I have to say. There's not going to be a very easy path for me to only just ask one question and be satisfied. So I just really want to ask really lots of interesting questions that at the moment are floating in my mind. But if I had to actually ask one question that at the moment I think is quite worrisome, and it actually means, it's been an inflicting point this year, and I believe that is the deflationary pressures that we are experiencing because of the oil decline that we've suffered this year, and how and what's their view on how we can get out of this vicious cycle where it seems like it seems very difficult, near to impossible, that inflations that are trying to be achieved in Japan, in Europe, even in the US, even though they might not be as notorious telling, or as vocal telling, hey, we need to meet the 2% inflation compared to the commitment that exists in Japan, etc. But I really want to understand what the view from Ashraf, from Boris, and from Adam is about how we can turn the corner. How can actually we can enter a transition from depressed prices into a more into an era where we can actually have a more encouraging outlook for inflation into 2016, 2017, and it may depend on the Saudis. It may depend on OPEC whether or not they want to actually cut output, and that may actually be that might actually start setting the ball rolling. It might be because of tighter supply-demand labor conditions in certain countries, like in Japan, like in the UK, like in the US. We've seen that, and now we're starting to see whether or not you believe the data in Australia. We've seen in Australia another back-to-back blockbuster month in terms of employment, which to me, I mean, I was quite bewildered. The data we've seen in Australia equals to, in the last 2 months, equals to about 2 million people being employed in the US in the last 2 months. That's the quality of data that we've seen in Australia compared to that of the US if we were to just compare in terms of data. So yeah, deflationary pressures, and what's their view on it?
Okay, I know I'm not one of the experts, but here's your answer: crush the dollar.
Actually, that's crush the dollar. Yeah, that's an interesting.
That will do it, Ivan.
That's an interesting point, and it is my view actually that after 12 months that the dollar has been on a consistent rise, and I think that those that have taken a step back and they're not really trading the noise of intraday, but they're actually trading the 4 hours, the daily. I think the US dollar bull trend has been one of the easiest trends. Of course, in hindsight, it sounds very easy to say that, but it's been an environment where people has been basically buying the dollar because they were just seeking yields, and there was obviously that expectation of a normalization of US policy, and that all that hot money that went into Asia and all those emerging economies had to make its way back to the US. So obviously the US dollar has been rising in accordance with that view of, the bond yields are going to be rising.
If it was that easy, everyone would be on the golf course. Okay, so the way I see it is it became such a crowded trade, and there's a very good possibility that was a major inflection point that we saw last Thursday, and at least for possibly a move back to 120 in euros. So I really think the test for commodities bottoming, turning the corner, is going to be what happens with the dollar, what happens with the yuan if we continue to have depreciation of the yuan. That's going to make it more difficult to reflate. But really, the dollar is the linchpin to everything. So if we can break the dollar, yeah.
I think just adding to your view, the rate hike in December, whether it happens or not, which I believe is going to happen, otherwise it could be defined as another kind of a not black swan event, but certainly is going to be a disappointment 2 or 3 fold what we saw the GCB doing the week before. But I believe that it's been priced. Basically, the US dollar now has little room to appreciate unless the Federal Reserve communicates to the market, telegraphs to the market that there is going to be a consistent, steady pace on increasing rates, which is not going to happen. Why? Because the US is not justifying that. I mean, you actually get to see the US data, and other than a decent NFP report, I have to say, it wasn't that spectacular what we saw last week. It was at 211,000 versus 200,000. Yes, they've reached the 5% unemployment rate, but I always believe that the Federal Reserve has been in between a rock and a hard place, and they have been consistently delaying their hike. It was first expected in January, and then it came, okay, it's not going to be perhaps raised until April, May, spring, and then it was delayed until September, and then the expectations were pushed further into December. December, whether or not people accept it, I believe it's going to happen. But what happened next, that's what people care about. And what I believe is that Yellen company in the Federal Reserve helm, I believe they actually going to be very cautious, and they're going to think themselves, look, we've done our job. And why? Because I believe the Federal Reserve, what they don't want is they don't want to abruptly raise rates in the future if economic conditions happen to pick up significantly, which I don't believe they will in the short to medium term. I believe they're still going to be around 2%, which is below pre-financial crisis back in 2008. So it's going to be interesting, and I agree with your point, Dale. Actually, I think that the commodity prices, leaving aside the Canadian dollar, which I believe is going to be obviously more subject to what oil is going to behave into 2016, but I believe the Australian dollar and the New Zealand dollar being high-yielding currencies, and actually at present they still have higher yields than in the U.S. I believe that we might have actually found a bottom, and I have seen a few indications of that. I'm not sure if I can share my screen, but it will be interesting if I can share a.
Yeah, sure, Ivan. Go up to the left-hand side of the Hangout. You'll see a green box with an arrow.
Yeah.
Click that.
And then I've got three options. I suppose I gotta click on entire screen, right?
Yeah, the one you want to show, and then start. Because we already know how handsome you are.
Oh, you can see me, right?
I did. Now I'm seeing the FX Street.
Right.
Okay.
All right. Dale, I was expecting that you could make a comment about my brand new desk.
Your new what?
My new desk, because you just mentioned that you were seeing me.
All right. Here's my comment. May every drawer in your desk be filled with pips by the end of 2016.
Yeah, make that my pockets as well, yeah?
Yeah, well, okay, you know, drawers are bigger than my pockets.
Absolutely, yeah, that more money will fit in it. Okay, so can you see my screen?
Yeah, I do. Right now you're on.
Now you can see my cotvase.com. Yeah, this is a report that I tend to follow on a weekly basis. And even though people might think this is lagging because it is reported on Friday, even though the data is up until the Tuesday, so it's like say three days delay. Yeah. I believe that it holds significant relevance, and I always keep an eye on it. Let me first zoom the screen. Now we have the Australian dollar here, and what I tend to follow, other than commercials, large speculators and small speculators, separately I also tend to follow dealers, which happen to be net hedgers in the market, and those are like the market makers. Those
Where do you get that information on dealers? Because all you get is you don't get dealers on the.
No, I actually get the dealers from, actually I put together the data, if you allow me. Look, you see, this is the data that I put together per each currency, and this actually comprises the open interest, spec,
insider
commercial.
Trading, Ivan. Insider trading. You know what the banks are doing.
Listen, you just can go to CFT. The CFT website, and you can actually just get the data. That's what I do. And then what I do is I just crush the data in here. So I just introduce on a weekly basis. I introduce the data, but just for illustration purposes, I just want to show you this website, which it comes with a chart, so it's quite handy. A few weeks back, what we saw was that the commercials were starting to buy the Australian dollars on upticks. And that's actually something very significant, because as we know, market dynamics, as we know it, is that the commercials will always try to hedge by selling when the market is rising, and vice versa. And the large speculators, usually the hedge funds and those big boys working in banks, what we usually do is like they try to enter the trends when there is a correction in the market rather than at expensive prices. So you could actually, you can see we're talking about mid-November. We saw that the Australian dollar, right around the 70 handle, we saw the commercials that is the red line uptick just as the Australian dollar started to rise as well. So there was someone, and let's face it, the forex market is full of insider information. Now, whether people from the public knows it or not, that's a whole different story. But don't tell me that someone at the top of BMW, a CEO or president, might, of course, they might have insider information from the ECB, or there might be some colleagues that have that information, and they perhaps receive privilege leaks about the ECB might not be as dovish, and then they start to either amass euros, or they sell euros based on what the outcome might be. And here in the Australian dollar was very interesting. Why? Because we saw that uptick, and ever since, and whenever that happens, that more often than not, that's a turning point in the market. Now, for how long it lasts, that's a whole different story. What we've seen is that commercials were interested, and when they do that, is because they are in a rush. They're in a hurry to actually buy Australian dollars because they don't believe it's going to drop much further. So otherwise, they would just wait. They would just wait for the Aussie perhaps to just drop back to this double bottom, and then they can start amassing more Australian dollars. But they actually were buying on an uptick, and that's quite telling. Now, we've seen that run from 70 all the way to 74, and that's quite interesting because obviously now this is a very important level of resistance, and whatever happens here, it will obviously depend on market dynamics, on data, and I'm a firm believer that it is really hard to forecast what might happen 6 months in advance to 12 months in advance. What I believe and what I tend to do is I adapt on a daily basis to what the market is telling us, and it's a big jigsaw, and that jigsaw, putting it together, is quite challenging. When you look at the 6 months,
I'm glad you bring up jigsaw, because part of the jigsaw is understanding relationships and looking for market messages. And the COT is a great tool. I remember Steve Breeze started it in the 70s, publishing COT positions. You also could have just been perceptive enough to know that the Dixie was making new highs, successive new highs, and the Aussie was not making new lows, in fact had bottom in September. So the fact that the dollar was making new highs and the Aussie wasn't making new lows was a change, because every other time the dollar made a new high, the Aussie made a new low. So just seeing that there was relative strength in a pair is also a very good tool, and you have to compare what's the dollar doing. If they can't make new lows with the dollar going up, making new highs week after week, what would happen if the bid came out of the dollar?
Yeah, and what's going to be very interesting, Dale, it's something to be taken very seriously into account, is how the option market is going to be behaving going forward. And this is another sector that I tend to pay close attention to on a daily basis. Let me share my screen.
Yeah, that's a pearl. Those guys, right, you know what I say about options, Ivan? Options are like relationships. 90% of them expire worthless. And the guys that make the consistent money, they write the option. So you're probably paying attention to certain strike prices and looking for where.
Actually, what I'm paying attention to, Dale, and I don't want to get too much into detail about all, because that's a whole different market and the dynamics, etc. But I think that is a good measure and a good barometer to sentiment and feeling about what the market makers are pricing going forward, about the value of a currency 1 month in the future, 2 months into the future, etc. Now, let's check for 1 second the Australian dollar, and this is what I'm expecting. And what I check is the delta. What I check is the 25 risk reversal delta in the currencies. So what that basically means is that basically is telling me whether the market makers are pricing the calls more expensive than the puts, or vice versa. And that's actually going to be very important for me to know and to understand. Why? Because these people, these market makers in the options market, they actually have brilliant minds, other than brilliant and very expensive algorithms that actually, when introduce the right inputs, which obviously they get, and they have templates where they actually put all the inputs, they will actually value a call and a put in a certain currency, and we can observe here the Australian dollar on a $25 delta risk versus bid ask on 1 month, 2 months, 3 months. It's all negative and still quite negative. What that means is that the options market still telling you, hey, if you want to own puts in the Australian dollar, you still have to pay a premium quite much higher compared to the calls, and that's actually not changing quite just yet, okay? Because I'm telling
so
you,
we're not getting a confirmation on the move in the Aussie in the options market yet.
Yeah, but that's actually not sufficient. I mean, options is yet one more factor, and inside many other factors, and obviously another factor is going to be whether or not we are going to see a bit of consistency on this data and on the fundamentals by the Australian. But look, the options market is a market that more often than not gets it right. Obviously there might be volatile events that may change sentiment in the blink of an eye, and then what we saw with the Chinese equity market being on sharp declines on an average 5% per day. Obviously, the option market started to price extreme expensive calls for the yen within the space of a day or two. You know, it went from very bearish the yen into a very bullish view for the yen. So they are very adaptive. But what I'm telling you is that I'm still not getting that confirmation, and I haven't seen these deltas being reduced, being adjusted in favor of the Australian dollar just yet. So, you know, okay, I will be cautious. Obviously, these signals that we get from commercials from tops, from bottoms around 70, that's an interesting sign. And we can see that 300, 400 pip swing, and that's been obviously great. Whoever could pick that up, and we'll see. I mean, this is again one more element that needs to be taken into consideration, and yeah, that's something that I pay a lot of attention, just as I pay attention to these curves down below, which it's telling you about implied volatility and the historical volatility. So basically what it's telling you at the moment, it's quite neutral, so it's not telling you much, but sometimes when there's a big divergence between implied and historical volatility, it can actually suggest whether or not there's going to be gamma scalping in place, or there's going to be more kind of a directional market. So, you know, these are concepts that are very interesting, but again, it's a complete different beast, and you know, you obviously have to have knowledge about it to understand that.
Well, I'd like to wrap it with this, Ivan. Great to meet you. I believe that you're on the wrong side of the panel. You could be one of the experts. It was a great discussion. You brought up a lot of things that people could pay attention to, so you edified LAR today. Nice to meet you, and I look forward to working with you.
Absolutely. Look forward to have a great panel day next week. Yeah, and yeah, it's been a pleasure.
Okay, I've been good hunting, and let's do this. Let's get back together every once in a while, and your views are edifying. So appreciate meeting you today, and good hunting, and we'll be paying attention to things that perhaps we weren't before this conversation.
Okay, great, Dale. Thank you very much.
All right.